It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Tuesday evening. It's November 1st, 2016. Crude is range bound with a bull bias this evening after the bears tried twice and failed to leave the range. Got a pretty decent pendulum swing setting up on crude. Even the S&P is bearish in the medium term, but after a monster move lower today, we may see the buyers get a pretty good move back to the battle zone. We'll see if they can hold the next pullback. Gold is bullish with a big spike in channel, so the bulls are looking for traps and failures. And of course, the euro also bullish, a beautiful wedge on the euro today, really getting moving to the upside. But the euro is right at the wedge target, and so therefore we're waiting for a pullback, or we got to get through the wedge target, looking for the next leg higher. Boy, we're looking forward to an amazing month of November. We get a bunch of news this week, but a bunch of news this month. Tons of volatility expected this month of November, and of course, right, that means a bunch of tradable opportunities. It's great to have you here with me tonight on the newsletter or in our trade room at 8 o'clock Eastern time with our advanced members. I got a great video tonight, plenty of reliable trade setups. Before we jump into the charts though and put the plan for tomorrow, I want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link. Come over here and join me with the full-length version of the video and get all the analysis for this evening. While you're here, please don't forget, join the mailing list. Upper left-hand corner, I'll send you an email every evening before 8 p.m. Eastern time when our newsletter goes live. Below the video, remember to download those charts. You can have the charts ready for your computer tomorrow for your own trading day. Found those charts below the video tonight. In the upper right-hand corner, please don't forget to grab your free pass. If you're not a member here at School of Trade, I'd love to invite you into the trade room this week as a guest. Grab that free pass in the upper right-hand corner. And if you're new to School of Trade, if you're brand new here to the SOT community, please don't forget, we get a great frequently asked questions page on our blog. And I'm always standing by 24/7, 365 to give you guys a hand. Hope you guys are having a great week here so far. Hope you had a great Halloween. I know, right? Always one of my favorite holidays of the year. I had a blast last night scaring the you-know-whats out of those kids in my neighborhood. Hope you guys had a great Halloween. Welcome back, though. We get some work to do tonight. Hopefully, I'll be out of here. I'll be out of your hair before the old World Series game starts for you. Who you got in the game tonight, man? I'm excited. I'm definitely rooting for the Indians. But I got to say, I wouldn't mind seeing the Cubs win either, right? I'm a little bit impartial to it. We'll talk more about that later, though. We got some work to do here. I'll try to get you guys out of here before the game starts. Let's jump right in. Economic news for tomorrow. We got nothing on the schedule for tonight, right? Tuesday evening, nothing on the schedule for tonight, and we're going to go right into tomorrow. Tomorrow's a pretty busy news day. It's going to be early in the day, middle of the day, and then late in the day. And you'll see what I mean here in just a moment. First of all, in the London session, we're going to hear from France and Germany, 450, 455. 5:30 from Great Britain. So early in the session, of course, if you're in London, that'll be right in kind of the meat and potatoes of your session tomorrow. But in the U.S. session, traders, right, early news tomorrow, 4:50, 4:55, 5:30. Be aware of that if you're trading the London session tomorrow. If you're with me tomorrow morning in the trade room at 8 o'clock Eastern time, we've got the employment report at 8:15. That typically isn't going to be very big of a mover here. That employment number is really used most often, right, as an indication of what Friday's non-farm payroll report will look like. So you're probably not going to see too much of the needle movement at 8:15 tomorrow, but we definitely have a big news event at 10:30 a.m. tomorrow from the petroleum status report. That, of course, being the crude oil inventory report tomorrow. And then, of course, we're going to go down to the FOMC announcement at 2 p.m. Eastern time before we go into the retail sales from our good friends down under at 7:30 p.m. We'll talk about tomorrow night's news. We'll talk about that tomorrow night. Be aware, though, we do have some late evening news tomorrow from Australia and, of course, our friends in China as well. So be aware of that tomorrow evening. But looking at this again, news at 4:50, 4:55, and 5:30 in the London session. Again, like I said earlier, I don't think that ADP employment number is going to move the needle too much tomorrow. Usually that's going to be directly used for Friday's non-farm payrolls at 8:30. So I'm not expecting much out of that. My big mover tomorrow, though, is definitely going to be at 10:30 a.m. for crude and the S&P. For whatever reason right now, the S&P loves to follow crude. The price of oil is very much a factor, a correlated factor of the S&P. So normally I would say just watch crude tomorrow, but boy, over the past 11 months now, right? Ever since the beginning of this year, it really has played a very active role in the price of equities. So inventories tomorrow at 10:30 a.m. Eastern time. I always give it a 15-minute buffer, 15 minutes before, 15 minutes after, at least 10 minutes after that news comes out. Give it some time for that whippiness, right, to settle down, find that new direction, right, and then follow the plan. We'll be trading that tomorrow, of course, in real time in our trade room. The big news tomorrow, of course, is the FOMC meeting announcement. Now, remember, the way this works is you're going to hear the announcement at 2 o'clock, and then 2:15 to 3 o'clock, they have that, right, that press conference. It's very similar, right, to the announcement we hear from Draghi at the ECB, right, on a Thursday morning, I think is when they usually do it, right? I should know that by now. But again, FOMC meeting announcement tomorrow afternoon at 2 p.m. Eastern time. Again, the announcement will hit at 2 o'clock, and then they have that press conference, anywhere from 2:15 to 3 o'clock. The most important thing you want to remember about the FOMC announcement is really anything after 11:30 tomorrow morning is going to be really light volume, and it's a gambler's market really after 11:30 tomorrow morning. So be careful after 11:30 a.m. You'll see it. The volume should dry up pretty quick, and that volume will start drying up after 11 a.m. and you'll see the lunchtime session get eerily quiet because nobody wants to take positions ahead of what is usually a pretty explosive movement after that 2 o'clock announcement. Now, I know, guys, we always like to chase volatility after these big news events come out, but remember, lots of volatility, even the increased volume that comes with it, is not going to help you with your liquidity problems. The big challenge we have with news is liquidity. Stops aren't going to hold. The knife cuts both ways. You can make a bunch of cash in a very short period of time, but usually the risk to your account, the risk to your confidence, taking big losses if it goes against you. And again, your stop's not going to hold because of liquidity problems we have during news. So be careful tomorrow after the news comes out. Think of it as that 15-minute buffer. After the news comes out, give it at least 15 minutes. If it's moving around like a wild animal, I don't recommend you try to trade it. My personal opinion is there are so many times during the week that you can trade with regular volume in regular hours in normal price action. It doesn't make a lot of sense. I realize we always want to chase that big volatile move that happens after news, right? But it's very difficult to see consistent results. The key word is consistent. We might get lucky every once in a while grabbing some news moves, right? But try doing it every time, and it becomes a pretty big waste of time and money because you'll make some, give it all back, make some, give it all back. I'd rather focus on the other 98% of the time we have available because that's where the most consistent opportunities are going to come. All right, guys? Got the plan for tomorrow. Let's dig right in here now. We get some great ranges to work with. We'll go crude, S&P, gold, and maybe a little bit of euro before we finish up tonight. Crude is range bound with a bull bias after the bears tried twice to leave the range, and now the buyers are looking for a rotation back to the highs and possibly a full pendulum swing by the end of the morning tomorrow. The most important thing for the buyers is to get in near the lows of this range and avoid buying the highs of the range on the way back up again. Sellers, on the other hand, need to stay patient because the bulls really look strong coming off those lows, and the most reliable place to be selling will likely be back at the range highs for a rotation back down to those lows. Now, whenever we have a trading range, one of the things we always talk about here in this newsletter, whenever we have a trading range, I'm looking for rotation, right? Buy the low, sell the high, buy the low, sell the high. I want to avoid the middle, right? Break this into thirds, the upper third, the middle third, and the bottom third. Buy the lower third, sell the higher third, avoid the middle third like the plague. Range rotation, stay away from the middle, buy the low, sell the high. What we're getting right now, though, is we're getting a great example of what we call a pendulum swing. We saw a bunch of these today on a shorter term time frame in real time in our trade room. As the price goes lower, the amount that these sellers are able to dig lower, think about the balance right in the middle, the amount that these sellers are able to push this price lower, if they fail once, twice, back up, we call that the two-try rule, right? Looking for the sellers to try twice and then back up. Now, where are we going at that point now? Obviously, we're going to go back to the high of that range, but it's probably going to overcorrect just about as much, right? Just about as much as it moved outside of the range. So when I talk about a trading range, Buy low, sell high, focus on those failures, right? Failure setups will always be the most reliable. Use the old 2-try rule. We teach all this in the intermediate classes here at School of Trade. And of course, look for that range rotation and use that pendulum swing. Think of a trading range as a balance area, right? Think of the range as a balance area, and as it goes outside of the range, it's going to want to overcompensate, right, to balance itself out, right? Think of that kind of pendulum swinging back and forth. Right now, we're down here and we're trying to get those bulls, right? Get those bulls in gear here and get this price going back up into that range. Here's my trading range. There's the once, there's the twice, and now we're looking to make that move back up. I'm going to go out and outline that pendulum swing, right? That pendulum target now is going to be at 54 to 65. At the very least, we're expecting a move back to the top of the range, right? At the very most, we're expecting a move right up into this area here. It's a little bit tough to tell. 54, of course, it's a range expansion. 65 will be the full-blown pendulum swing. Usually what happens is we get stuck around that range expansion, right? And the easiest area there, the most reliable target, will be that 47.54. Run it lower, back up. Buyers looking for targets at the high of the range, and of course at the range expansion. So most important thing right now is the buyers don't want to be buying inside the middle. So ideally for a buyer, seller failure, right, to buy the low, the buyers really want to focus on what I always try to do is I always try to get this the market outside of the range, and then as it's coming in, right, then start looking for those buying opportunities as it's coming in. What I don't want to do is try to force those trades. Well, look back in time, right? Look at how choppy it gets in the middle, right? Buy those lows, sell those highs, stay away from the middle, and this is really helping us out right now that we get this big move lower in the afternoon session, and now we can hopefully get, as long as inventories don't interrupt us tomorrow, right, get that nice big pendulum swing back down. Looking at the buy side right now, what I don't want to do is get below this range and try to buy into it. So for example, if we did pull back right now, got to be careful, right, trying to buy below the low of that range. What would really be kind of ideal right now would be as the price pulls back to keep that trend line, right, keep that moving average above the low of the range, or if price pulls back a little bit deeper, seller failure now, so I can buy, right, I can buy here above the low of that range. That's going to be a key component. Obviously, if we rotate all the way back down, then we're not worried about, right? Then we're not worried about, buying into that 46.72. So it's really just on this pullback right now. So buyers, of course, looking to stay above the low. Really, at this point, the buyers either want to be buying down here or buying here, right? That's pretty much where you want to be a buyer right now. Either break out, pull back, hold above, or bring it right on down, seller failure, right? And then get that buy going back higher here. Couple things you want to be thinking about here as it goes higher, right? Breakout, pullback. Again, buying as close to the low of that range as possible. Avoid trying to buy into the high, breakout, pullback, and then go from there. The key is, look where I'm drawing the moving average, right? The moving average is above the low of the range. Okay, bottom line right now is you want to be buying the low, but you don't want to be buying into the low, right? The low, if it's above you, it'll be resistance, right? Below you, it'll be support. The key is if we do find our way back up to the highs of this range, I don't want to buy into the highs, and I have to assume there are going to be sellers trying to fade those highs, and so I want to make sure I get a strong enough break out of those highs to make sure I have enough room, right? Enough strength to get that carry up to that 47.54. One of my favorite ways to trade at the high of a range when we're expecting to see a big range rotation, I call it the okie doke breakout. Basically, imagine now you're back to the highs. We're now looking to buy that pullback. Well, remember, at this point now, you have to assume that sellers are going to be trying to sell this back into that range. They're not going to care about the pendulum swing, right? They're going to be looking to sell back into that range. So what I do is I'll play it against them. Let them try, find that swing. That's where the stops are going to be. And now I know where I can be hunting for, looking for buying opportunities as it pushes higher, right? So rather than your tip